it's not just a little bit, I'll call it the plumbing of the system, essentially. MSCI took out Russia, and we saw ETFs that were in Russia. In fact, they can't trade them anymore, which is really wreaked havoc for that. And how's China doing?
So the super interesting thing that has happened is, David, if you go back historically, 2006, China and Russia had almost the same weight. There was one point where they were both 10% of MSCI. Then just before the war, I think Russia was about 2.7, just under 3% of MSCI. Of course, as of this week, the share went to zero because it got taken out of MSCI. So here you are with China being in excess of 30%, and if you add Hong Kong, in excess of 40%, and if you include China, Hong Kong, and Taiwan not as as one block, but as sort of an area, Northern Asia, that's a huge block of emerging markets. And you have Russia at zero. Somebody at some point, when they do the report card, I'm just putting that to say what happened on your watch in your country and with the market and the companies in your country. So that is really, really interesting. The other thing that happened over the last couple of weeks is because commodity prices went up. Is there probably
what about that? I mean, Rock Creek had their note out at the end of this week, and then you had some, what I found to be stunning numbers of the NASDAQ.
So while everybody is aware that NASDAQ was down more than 20%, huge numbers of companies, more than 40%, were down. The share of companies in NASDAQ, particularly smaller companies, that was down was huge. And there were like about 20% of NASDAQ was down by more than 50%. And I think that will continue. Sort of benefited from the momentum in the market.
Let's go into what will continue for how long, but two things. One is the move to U.S. from other alternatives like Europe or other EM investments, but also the move to value versus growth or tech. Do you expect that to continue for a while, or is it getting close to the point where you so-called buy the dip?
I think the move towards value has really just started. I think you're not going to have the U.S. government put another set of many trillions into the market. So you're not going to have what happened post-2008 and post-2020 happened. It's going to be the market trying to work in a very different environment with higher inflation. So I think the kind of returns that we've seen over the last 10 years are sort of behind us. You're going to have more obvious kinds of returns for the companies that deserve to benefit from growth and who are doing well. And that is, David, I think, a move towards active versus passive management that will be a big change in the market coming forward.
Quickly here at the end, I'm going to put you on the spot. I don't know the answer to this question. I know that you at Rock Creek have a portfolio you run against other portfolios based on ESG, environmental, social, and governance. I know in the past it has done better. Is it holding up in this kind of chaotic marketplace?
So the really interesting thing is everyone is looking at oil prices, but also if you look at the value of the ETFs, even not active stocks or private companies, for energy, solar, wind, or uranium, which is sort of looking at directly at nuclear energy, those have gone up quite a bit too, between 10% and 20% over the last couple of weeks as the war started. So I wouldn't say that they've done as well as wheat or as nickel or as oil, but certainly have done well, and looking forward, I think we'll be the beneficiaries of what's happening, not just in the U.S., but of course in Europe, as we've seen what the ECB said and what the Europeans have said about moving much faster into renewables to become self-sufficient and to build out their energy security.
It's fascinating. Really appreciate you being here. We've been following this with Afsani Beshelet through the months with Rock Creek and what they've done on the ESG, how this war really might affect the shift towards alternative energy. Really great to have you with us. That's Afsani Beshelet. As I say, she's the founder and the CEO of Rock Creek. Coming up, we look at the week ahead in markets around the world. That's next on Wall Street Week on Bloomberg.
Calvary Hospital. It was April at the height of the pandemic. I was alone, caring for my dying mom. If I brought her to a hospital, I couldn't stay with her, and every doctor and nurse simply refused to come into our house. That is until Calvary Hospice came and rescued us. Nurse Kelly immediately assessed Mom and guided me through every step on bringing her back to being comfortable and pain-free, physically and mentally. She was accessible 24/7 as we FaceTimed day and night. I was never concerned about Mom's safety. 8 days later, Mom passed on with dignity and grace, thanks to an angel called Nurse Kelly and a miraculous place called Calvary. Sincerely, Angela Calabrese.
This is Frank Calamari, president of Calvary Hospital. During this time, be assured that Calvary continues to provide the safest and healthiest environment for our staff, our patients, and their families.
You finally found it. The one with the hardwood floors, center kitchen island, even a fireplace. Getting that dream house starts with a mortgage-free approval from Columbia Bank. Fast, easy, and right online, a Columbia Bank pre-approval is your first step to getting a great rate to let the world know. Back off! Those granite countertops, walk-in closets, and ensuite master bathroom are mine. So get your mortgage pre-approval in minutes at ColumbiaBankOnline.com. Member FDIC, Equal Housing Lender. Listening.
This is Wall Street Week. I'm David Weston. Time to take a look at next week on Global Wall Street, starting with Julia Sally in Singapore.
Thanks, David. Central banks in Japan, Indonesia, and Taiwan hold rate meetings this week in the wake of the Fed and amidst energy prices surging on the war in Ukraine. On that note, there's fresh inflation data due from India and Japan, as well as minutes from the latest Bank of Korea and RBA meetings. And we'll also get the latest Chinese data dump showing the extent of the slowdown in the world's second biggest economy. Now over to Danny Berger in London. Danny?
Thanks, Juliet. In Europe this coming week, there's really only one story, and that is the war in Ukraine. Of utmost importance is the humanitarian crisis as the war goes into another week with more casualties and more Ukrainians attempting to flee the country to seek refuge. Now, beyond that, we're going to pay close attention to any talks between Russia and Ukraine, as well as the second-order effects on the economy as oil and energy prices move higher, raw material prices move higher, the inflation that causes, and, of course, throughout Europe, the cost of living impact that will have. Now, over to Romaine Bostic in New York.
Thanks, Danny. The Federal Reserve here in the U.S. is widely expected to raise its benchmark interest rate for the first time since 2018. Market expectations are for a lift of 25 basis points, but the big question lingering out there right now is whether the recent surge in energy prices has deepened inflation enough to warrant a more aggressive monetary policy response. Fed Chair Jerome Powell, though, has said that Russia's invasion of Ukraine means the Fed will have to, quote, move carefully. Meanwhile, top Democrats and Republicans in Congress are vowing to next week push forward with a proposal to suspend Russia's preferential trade relations with the U.S. and clear the way for tariff increases. Those increases could be material for some investors. David?
Thanks to Julia Sally, Danny Berger, and Romaine Bostic. Coming up, what the war in Ukraine means for investors with Sam Zell of Equity Group Investors.
I think there are places that are uninvestable that were investable a month ago.
This is Wall Street Week on Bloomberg.
Listen to Bloomberg Radio wherever you are. Online at BloombergRadio.com and around the globe via the Bloomberg Business app.
Now Bloomberg traffic and weather inbound George Washington Bridge delays still 60 minutes upstairs, 40 minutes at the inbound lower level tolls. On the outbound side, well, it's very heavy on the bridge, and it's very heavy getting to the bridge. The west side, 50's on up, east side, 40's on up. Cross Bronx, well before the Brussner interchange on in once again. Outbound side of the Holland Tunnel looks to be 40 minutes, 40 into the Turnpike, 50 from 1 and 9. And 30 minutes out, 15 minutes into the Lincoln Tunnel in sports. The Knicks visit Memphis. The Islanders host Winnipeg. College basketball this afternoon at the Big Ten tournament. Rutgers lost to Iowa 84-74. The Bloomberg 11:30 three-day weather forecast. For tonight, we'll see showers, but overnight, lows dipping down to 35 to 40. The weekend, Saturday, not a nice day. Rainy, windy, maybe some wet snow. An early high of 45 to 50. The temperatures really begin to fall. Sunday, sunny and breezy, high 35 to 40. Monday, partly sunny, high 50 to 55. Right now, clear in New York, we're at 46 degrees. The support sponsored by Discover. When it comes to your credit card, Discover believes in having real people available 24/7 to help answer your questions. Discover exceptionally common sense. With the best ride, 8 a.m. out of the city, I'm Ed Kalengi. This is Bloomberg 11:30, bringing you global news 24 hours a day.
The business of sports, where the money is flowing inside sports around the globe. Hi, I'm Michael Barr. The good news, there's an MLB agreement, but does baseball have some work to do? Join Scarlet 2, Mike Lynch and me when we speak with Fox Sports National Baseball writer and author of How to Beat a Broken Game, Pedro Mora. Bloomberg Business of Sports, tonight at 7 on Bloomberg 1130, the Bloomberg Business app, and BloombergRadio.com. Also available via podcast on iTunes.
When you subscribe to Bloomberg, you will get more than news. You will get inspiration to feed your ambitions. You will put a woman on Mars. You will refreeze the ice cap. You will be the first chief crypto officer. You will power change and redefine the future. But before you invent, pioneer, disrupt, before you change the world, Bloomberg. Discover more at Bloomberg.com/UL.
Is a genocide of Ukrainians. War is hell. We heard that first from American Civil War General William Tecumseh Sherman. And hell is a good description for much of what we are seeing in Ukraine, as Russian forces press their attack, destroying homes and families in their wake. In the process, wreak havoc far beyond the borders of Ukraine itself. The United States and its allies have imposed sanctions on Russia that President Biden says are crippling.
We are enforcing the most significant package of economic sanctions in history, and it's causing significant damage to Russia's economy. It has caused Russian economy to, quite frankly, crater.
Oil prices have gone through the roof.
Oh my God! It's $100 is going to pay.
I think it's crazy when you get to the kinds of prices that we're dealing with today, the 120, 130 barrels a day. You're starting to encroach upon that area where demand destruction will start to occur.
And Western companies are stampeding their way out of Russia, from American Express to KPMG to McDonald's and many more.
Goldman exits Russia. The bank becomes the first major Wall Street player to announce it's pulling out of the country as its war with Ukraine rages on.
Raising the question whether we're seeing a temporary setback for those who've invested in Russia, or whether it is something more permanent.
The longer this goes on, it's going to hit investor sentiment. It's obviously going to hit inflation for the longer term instead of maybe the spike that we were expecting. It's going to affect currencies.
When we need investment advice, we turn to Sam Zell, the famed investor who is the chairman and founder of Equity Group Investors. Sam, welcome to Wall Street Week. Great to have you here. We have this crisis in Europe, a true crisis, a war going on in Europe. First and foremost, of course, it's about the Ukrainian people, what they're going through, even as we speak. But it also has ramifications for investors. What do you see right now as ramifications? Are there some sectors that are uninvestable today that weren't a month ago?
Well, I think, first of all, the answer is I think there are places that are uninvestable that were investable a month ago. But I also think that it, for an investor, this is a level of uncertainty that we haven't had to deal with. And, if you're an investor today and you were investing in Russia, how do you feel about your investments in China? How do you feel about your investments in other places in the world that have not responded to the Ukraine invasion the way we would have expected? So I think that, if anything, I think that as an investor, I think you stay closer to home. And I don't think you become as involved or a believer in globalization as you might have, 6 months ago.
Are there some things that are more attractive today than we were before? I mean, for example, gold. Where are you on gold these days?
Well, I said that I had bought some gold for the first time in my life. I historically viewed gold as non-income producing base metal, but I think that the way in which fiat currencies have been, extended and printed, the more I get concerned about whether or not, we're going to see weakness in the value of the dollar or even loss of its every-year stature. So I bought some gold, and I think some gold ought to be a part of every investor's balance. But I'm not haven't turned into a gold bug or believe it ought to be a big chunk of anybody's portfolio.
So what about energy? You've been involved in energy through the years. Energy is very much in the center right now, given what's going on with, for example, the ban for U.S. on Russian oil, with the price of oil, for goodness sakes. Who would have thought? Where are you on energy investments right now?
Well, I've always believed that diversification is your friend. And I've always attempted to have some kind of energy diversification and continue to do so. I think the U.S. government's attitude about energy and the Biden administration in particular, I think is extraordinarily naive. And I think the price of oil is very much the fact that they sent this message, whether it be blocking pipelines or making permitting impossible to get, including banks basically saying, when your revolver comes due, we're not going to renew it because we got to reduce our energy exposure. The transition from fossil fuels to renewables is going to be a very long process, and we're acting as though it's going to be a next week process. And I think that's very dangerous, and I think it's going to lead to overpriced fossil fuel when there is no choice as to its needs.
There are reports this week that the Biden administration may be rethinking some of what they've said and done when it comes to fossil fuels, and are reaching out even to the oil industry. Is that feasible to turn around, at least to some extent, on that issue? As an investor, can you go and back into, for example, shale oil and really reinvest in that? Or are you too nervous about whether they'll stick to their new policy?
First of all, I don't believe there is a new policy. Second of all, at the same time that Biden was prohibiting, import of Russian oil, he was doubling down on, renewables and blocking pipelines, etc. So whether or not the administration has given thought to that, it certainly doesn't appear to be the case. And even if it did make a statement to that, I wonder as an investor how much I would trust it and how much in the way of guarantees I would demand before I would allocate more capital into fossil fuels.
So for you right now, as you look at it, given what you know, going back into shale in a big way is not a particularly attractive alternative.
Yeah, we have shale investments today.
Yeah.
We continue to have them. We're not eliminating them, but the natural expansion that would come with rising prices has also not occurred because the administration is so negative and so discouraging.
What about other alternatives for the administration in trying to do something about the price of crude, but also natural gas? For example, Saudi Arabia. Saudi Arabia could increase their output substantially. They seem to be reluctant to do that. Venezuela, the forbidden Venezuela, maybe you could get that back on. And even Iran.
But do you want to do all of that while you're inhibiting made in America fossil fuels? That just doesn't make any sense. What is Venezuela going to do with the resources that are going to come from releasing sanctions? They're not going to be friendly to the United States. That doesn't make sense. The whole idea of the administration being focused on getting the Iran population back in the world while they're propagating, all kinds of stuff, all over the Middle East, just doesn't make any sense, giving them the resources to do that. The last time we did that, first thing they did was they financed Hezbollah and various other terrorist groups. So that's, we got to be supporting domestic policy. We got to be supporting domestic fossil fuels. We got to be realistic about the fact that a transition will occur, but it's not going to occur because somebody in Congress or somebody in the White House thinks tomorrow would be a good idea. It's got to occur based on a pragmatic assessment of how long it will take and what level of upheaval it will cause.
I understand when we started this conversation where you're saying there's a lot of uncertainty given what's going on in Ukraine, what's going on in Europe. As an investor, how do you deal with this sort of geopolitical uncertainty? Do you on the one hand say, I don't know what's going to happen, so I just have to get more conservative, draw my horses in, maybe go into cash, for example, or do you try to game it out and think it could go this way, it could go that way, and this is the way I should put my bets?
I can't speak for any other investor. I can only speak for myself. And the result for myself is added liquidity, not gaming it, because in effect we've proven beyond a reasonable doubt that as prognosticators of what Putin may or may not do is almost impossible to accept. And certainly we've been wrong over and over again. So I think diversification, liquidity, patience are really the governing factors in terms of how we might respond to the uncertainties that this current environment is creating.
It's so great to have you here on Wall Street Week. Thank you so much. Sam Zell is the founder and chairman of Equity Group Investments. Coming up, special contributor Larry Summers wraps up a difficult week on Global Wall Street. This is Wall Street Week on Bloomberg.
Verdin LLP Accountants and Advisors presents Industry Chat with Jeff Kovacs, partner and head of the Technology and Life Sciences practice.
Software as a service, or SaaS companies, are transforming the enterprise software industry. To reach scale, it is critical to develop key metrics that provide insight into customer acquisition, churn, and lifetime value. This allows SaaS managers to accurately forecast, plan, and measure growth. They also assist resource allocation and efficient capital deployment to maximize revenue and investment. Helping clients scale their business and plan for the future is what we do at Verdin. If you're a SaaS company executive, let Verdin help you develop innovative solutions to enhance your company's value and fuel its growth.
For more industry chat from Verdin Accountants and Advisors, visit VerdinLLP.com. That's VerdinLLP.com. Verdin Accountants and Advisors. We listen, we solve, we do.
Are you in possession of gold, silver, or platinum? Maybe even some rare coins or old paper money that you'd like to sell? Stack's Bowers Galleries offers top dollar with immediate cash payment and is one of the largest, most trusted and ethical dealers and auctioneers of numismatic items in the U.S. for 90 years. Come visit our location on Park Avenue between 57th and 58th today for a free, no-obligation appraisal of your precious metal bullion items, rare coins, or old paper money. Whether you're in the market to buy or sell your valuable coins or precious metals, we can help. For more information or to speak to a trusted specialist, just call us at 212-582-2580. That's 212-582-2580. We'll help turn your collectibles into a generous cash payment today. Visit us in person or online at stacksbowers.com. That's STACKS Bowers.com. Stop by one of our locations today in New York City, Philadelphia, or Boston, coming in 2022.
This is Wall Street Week. I'm David Brett. Joined once again this week by our special contributor, Larry Summers of Harvard. So, Larry, a lot happened this week, a lot of it having to do with Ukraine, but we also got CPI numbers that came in where they were projected to end, but they were the highest in 40 years, 7.9% year over year. What do you make of those numbers? And by the way, let me ask you the unfair question. When is this going to peak?
Look, these numbers were not a surprise. And by the way, while inflation was 7.9% over the last year, if you annualize the monthly figure, it was close to 10%. So we're not seeing deceleration yet. And given what's happened in commodity markets, I don't think we're going to see deceleration for